Hey guys, today we're going to talk about the top 4 mistakes people make during the mortgage process. Let's get started. Hey, my name's Toby Russell. I'm a realtor here in North Carolina and I cover the Triad area. I'm here today with
Gina Milloway with Certainty Home Loans here in North Carolina.
And today we're talking about the top 4 mistakes. Today we're talking about the top 4 mistakes that people make during the mortgage process. We're going to count them down from number 4 is changing jobs during the mortgage process.
Yes, so Toby, this is really important and it's something that I actually experience quite a bit. Why is this important? When we pre-approve you for a loan, it's based on your current job. It's based on the length of time, the stability of the job, and the pay of the job. So if you change jobs in this process, then we have to go through the approval process again, and it might affect your loan. It might affect the amount that you qualify for, or it might affect you having the ability to get the loan altogether. It has to be likely to continue for us to be able to use that income to qualify you. The other big thing I see is self-employment income. So people like to start their own jobs, which is great. However, when you're applying for a mortgage, we need 2 years of history on that self-employment income in order for us to include it. Now, Toby, what's a big thing on this?
Yeah, that's the 2 years of income that Uncle Sam has seen.
Yes.
Not the income you make.
Yes.
I don't know how many times I hear people that are self-employed, either they haven't been self-employed for 2 years, or they say, well, I show making this.
Yes.
Like, great, that doesn't help you if you have other stuff, unless you're going to use this as a down payment maybe.
So if you report that your profit is $20,000 a year, that is your income. That is your self-employment income. Whatever you tell Uncle Sam it is, that's what we have to use.
Right. You might be living in a $400,000 house driving a Land Rover, but you make $20,000 a year, so
Yes.
doesn't help.
No, not at all. So number 3 is going to be changes in your credit profile. Once you start looking for a house and you've been pre-approved for a home and you're going through the mortgage process, do not make any changes to your credit profile. So one of the things I see is missing payments. We need 12 months of clean history on your credit report. If you have any recent missed payments, that is going to cause the loan to be denied most likely. Another item we see on credit reports is adding new accounts or new debt. If you add new debt, then we have to go back and requalify you based on the new debt. And if you add too much, you may no longer qualify for the home that you want to buy because the new debt is too much. Also, closing accounts. When you pay off an account, especially a credit card revolving account, do not pay it off. This affects your credit score drastically. So do not pay those credit cards off at all. If you have any questions about what will and will not affect your personal mortgage, always reach out to your lender and ask them before making any changes. And so something I wanted to talk about real quick, Toby, well, maybe we can link my video to this in the notes, is forbearance. Right now, if you're watching this in the future, we're in the middle of 2020 with the COVID-19 epidemic. And forbearances are being handed out like candy right now. Some people are like, great, no mortgage payment for 3 months, right? It's great. No, you are essentially telling the bank, I cannot make my payment, whether that's true or not. So if you are planning to get a mortgage in the next 12 months, do not select that forbearance option.
Does the forbearance affect you in the same way as if you just skipped those payments, just didn't make them?
Essentially, yes. They cannot report it negatively against you right now. So they can't report it as a missed payment, technically. They have to report it current, but the comment section will say affected by natural disaster. And when a lender looks at that, that's telling me that you're having issues paying your mortgage.
So number 3 is choosing a local trusted lender that's close by to the house you're looking at.
Absolutely. So, and Toby can attribute to why this is important because he is a realtor who works with lenders on issues. If you have a transaction that has absolutely no issues and is smooth as butter from the start to finish, go ahead with your online lender, that's fine. Toby, how many of those transactions have you had?
I would say 1 in 10.
If you're lucky.
Yeah. When you get them, they're so sweet. So nice.
So it is really rare to get a super smooth transaction. So if you have an online lender and you have an issue come up, you have an issue with an appraisal, an inspection, whatever it might be, you may not get the same person every time you call into your online lender. If you are working with somebody who knows the area, who knows the real estate agent, they have a personal relationship, they've worked together before, it makes it so much easier. They can reach out to me almost any time. I have done pre-approvals at 10, 11 o'clock at night, 6 o'clock in the morning, Saturday and Sunday. I'm available. I'm the same person. You will always get me when there is an emergency or a need that needs to be taken care of.
Chances are the online lender will not be in your area, won't be in your state, may not even be in your country. And it's going to be hard to get a hold of them when you need a pre-approval letter at the last minute on the house that you found that's so hot you need to make an offer right now.
And that is an excellent point, because this market, specifically in our area, homes are going under contract within minutes of going on the market. So you need to be ready to go. And if you need that pre-approval letter customized for that home, you need to be able to get it ASAP.
That's the biggest thing, is getting a custom pre-approval letter. Even though you're pre-approved for $200,000, if you're making an offer for $150,000, you don't want them to know that you're approved for more, or they're going to ask for more.
Right, exactly. So, the number one thing that we see is the mishandling of money or funds to close and down payment. So the biggest thing that I see is people trying to use cash for this purpose. You cannot use cash. If you have money in your mattress at home, you need to take it out and take it to the bank and let it sit there for at least 60 days, at least.
And this is called the seasoning process.
Yes, you need to season your money. So it has to be sourced if it's on the bank statement. So if you've been collecting money for 20 years, and you have it sitting at home and then you put it in the bank, we can't use it. We can't source it. We do not have paperwork to show where it came from. If you've just recently maybe sold a car and you can show the title, the bill of sale, that might be an exception that we can make. But typically, just assume you can't use cash. So if you have some you want to use, put it in the bank and let it sit there, and then come and do your loan. The other thing I see is people not saving enough money for your down payment and your closing costs. These are two separate things. So your down payment is based on your loan product. Are you doing a 10%, a 3.5%, or a 20% loan product? Then you have your closing cost, which include things like title, your attorney, your prepaids, your mortgage insurance, your taxes. These are closing costs.
The biggest place I see this is first-time home buyers that have the grandma that has some money or the uncle that has some money and wants to help them out to get them in their first home, which is great. You can do that. But there's a process to go through to get that, and that's called a gift letter, if I'm not mistaken. But it's actual paperwork, not just here you go.
So for gift funds, there are regulations around it. And one of the biggest downsides to it is if somebody gives you a gift, we're probably going to have to see their bank account to prove that they had the money to give you. And it can't be a loan either. So depending on your loan type, there are different regulations around gifts, who they come from, and how they're given to you. And it really is something that I run to on an everyday basis. People have cash money at home and they don't understand. It doesn't make sense why you can't use it. And I completely get it. I completely understand your side of it, but we can't use it. So again, put it in the bank. And if you have questions about it, call your lender, call your agent, figure out what you need to do with that money before you get started in the process.
Guys, if you've got any questions on the loan process, please give Gina a call.
336-602-7034.
Or if you're looking in North Carolina or anywhere in the Triad, I'd love to help you or talk to you. Phone number is 336-689-1702. And we'll have more videos next week. Thanks.
Talk to you soon.
1, 2, 3, let's switch this up.